Okay, so yeah, to repeat, thank you so much to the Indonesian Business Council and all the members of the Indonesia Business Council board for hosting this event and hosting this panel discussion, which is about how financial and monetary policies can help sustain a high and sustainable rate of growth in Indonesia. Obviously, this is a very hot topic in Indonesia. President Prabowo has come in promising to hike growth to 8% or so. And so I was hoping to talk to some of the panel members here about how they think that might be achieved. For the first question, Pak Chatib, we've seen Pak Prabowo promise 8% growth, and then in the past week or so, we've seen some fairly radical changes to the budget, deep cuts to areas like infrastructure and other departments, money being reallocated to the free meals program and to the Danantara scheme as well. This is the holding company and sovereign wealth fund for SOEs. How do you think that these policies might affect Indonesian growth, and how do you think that they fit into President Prabowo's plan to hit 8% growth in the next few years?
Well, thank you very much. This is a very tough question. Let me see if I can respond to your question. First of all, I don't think the role of the government budget is the most important instrument to promote the economic growth. Because if you look at in terms of this ratio to GDP, the government budget is only accounted about 16%, 1/6, right? So the most important thing to promote the economic growth to achieve 8% is in investment. Yeah, if with our incremental capital output ratio is about 6.8 now, if we want to grow by 8, we need investment over GDP around 12,000. Nowadays, our investment is around 8,800. So definitely, the first priority is to promote GDP growth, to boost the GDP growth. We have to attract foreign direct investment. We have to revitalize this domestic investment to promote growth. But let me respond to your second, not second question, because you mentioned about this budget efficiency, right? I think in a way, I'm for the quality of spending. I was a minister of finance, and I know there's a lot of spending that's probably not very efficient. And I think so I can see the justification why the government need to do the budget efficiency. But a couple of things that we have to look at carefully. The first one is, I don't think the government can cut the budget one size fits all across the board. So if you're talking, let me give an example, bear with me. If you cut the spending on traveling, but for the people at the Ministry of Foreign Affairs, that's gonna affect them significantly because they have to travel, or people at the BKPM, at the investment board. So you have to go, not sort of like using the formula, but look at whether this project effective or not, the quality of spending. So if you can reallocate the budget on something that have this achieved a relatively high multiplier, I don't see that the problem.
Thank you very much for that answer, Pak. So there is indeed a space for efficiencies, but you need to be selective about how you do them. Nicolo, would you like to come in with some comments?
Thank you. Thanks, Joe. So I think from my standpoint, maybe to provide some context, I look after global banking for UBS in the broader Southeast Asia and South Asia region. So I'll try to respond, providing a response in that context of banking. I think I fully agree with Pak Chatib, especially on the context of how do we bring the growth to 8%. And we have to look also at a number of other policies that have been announced, which I think are exciting. There's two that I would like to highlight. One, there's the aspect really of improving the liquidity on the stock market. I think that's a topic that a number of you in the room know well, and that we have discussed together in the past. If you look today at how can the Indonesian companies fund themselves, a lot of these come through lending because there is limited liquidity in the stock market. And I like to compare this to, for example, India, where we have seen a very strong growth driven by high liquidity in the stock market. Now, how do we do that? We do this by, for example, increasing the free float as one thing. And obviously, a lot of these measures around transparency and governance are also critical. This, I will say, will allow substantially to drive corporate investment because companies, whether SOE or private sector, will be able to tap, I would say, a much more liquid market. So I think these are things that we have, I will say, discussed less during the day, but I think are very exciting as we look towards the policies that are provided, because to get to that level of growth, you need to have a strong stock market. You need to have strong liquidity. And I think if you look, actually, I was talking about India again before, if you look there, the top 20 companies, a lot of them are private. If you look at the top 20 companies in Indonesia, there's a lot of SOEs. I think we can, by boosting the liquidity, we're going to have growth, I will say, in companies as well that today, I would say, are not tapping the lending market in the same way. So that's one thing. The other thing is obviously the creation of Danantara, which is extremely exciting in the sense that, and by the way, I'll make a bit of advertising here. We just published a report at UBS this week talking about it and explaining how we see this as a bull market factor for Indonesia because this will allow to create funding in many ways. Some people compare it to Temasek in how it can look at generating short-term liquidity, whether it's through the bond market, whether it's by share pledge, by selling asset that in the past will not be sold. So there is a lot of, I would say, potential that will be unlocked and therefore growth that will be unlocked to the creation of Danantara. What's even more exciting is the market today is not taking this into consideration. So I think we have, all the stock prices were up yesterday, but I think a lot of positive news coming out of this policy that will drive this growth to these levels.
Thank you. And Lavanya, do you have anything that you would like to add to that?
Yeah, so in terms of the policy measures itself, the budget cuts that we've seen, I think we take it in tandem with other announcements as well. So I don't think you can take it as a unique announcement. It needs to be taken in combination with things like trying to increase tax revenues, trying to basically broaden the tax base. All of this in combination will help create resources, mobilize resources in a manner that will actually allow for greater investment spending. So essentially, I think the idea here is that on the one hand, you are cutting budgets for certain sectors, and you're trying to streamline and make it more efficient. But at the same time, I think it's also a bit of signaling that needs to be maybe addressed, because budget cuts always signal austerity. And at the same time, on a headline basis, you're signaling higher growth, right? So I think at this point, it's a little bit of a story where you're trying to put a square peg into a round hole, and you just have to even out the size of either the peg or the hole, right? So I think the narrative also becomes very important as we go into fiscal consolidation, or as we go into fiscal position, monetary policy positions. All of this will also depend on the signal the government sends, the policies send, because that's essentially what drives perception, and that's what essentially drives flows at the end of the day.
Well, thank you very much for that. Thank you very much for all those insightful answers. The second question I'd like to ask is, as you said, Chatib, if Indonesia wants to grow, it needs foreign direct investment and large quantities of it. But we saw Indonesia hit record levels of FDI last year, but growth seems stubbornly stuck at around 5%, even trending downwards slightly. What does Indonesia need to do, not just to attract more FDI, but make sure that that FDI translates into growth?
Well, we can look at this perspective from two perspectives, basically. Yeah, the first one is, I think, I hate to say this, but this trade war between, or geopolitical tension between US and China somehow put Indonesia in relatively a better position. Why is that? Because if many countries, they put a production base in China, they want to enter the US market, they have to find other country as the production base, right? And if you look at Vietnam, during the first Trump presidency, Vietnam really benefited because this trade war, the relocation of the investment. Now let's look at the Vietnam. They run the trade surplus to the United States around 119 billion US dollar. And if you look at Indonesia, our trade surplus is about 19 billion US dollar, right? So I think there is a possibility if that relocation will come to Indonesia. So that's the global situation basically. But we have to do our homework. The most important thing is to improve the investment climate. You know, when I was in the government, I keep saying this, that one of the reasons of why many Indonesians become religious is because they have to deal with the government. If you apply something, you know, there's a lot of uncertainty, there's nothing you can do except pray to God. So we need to settle this issue, to do our homework, to make sure that this opportunity, the consistency of the policy, you know, are here. So investor will sort of like, you know, if they come to us, then they know for sure that they can do something. And if you ask me which sector, this should be export oriented, because 50% of our current account deficit is basically profit repatriation. If you go to the export oriented sector, you get the revenue in the US dollar, no risk of the currency mismatch, then you can put Indonesia as a production base, not for domestic market, but for the global market.
Thank you very much for that. Lavanya, what would be your perspective on this matter?
So FDI into Indonesia has increased significantly. I think last year BKPM recorded 60 billion US dollars in FDI inflows, right? And I think a lot of it, about 30% of it is concentrated in the minerals and mining sector. And a lot of it also comes from China, right? So I think at this point, as Pak Chatib said, there is a good synergy between Indonesia and China. And I think that is to Indonesia's advantage at this point. But at the same time, it tells you that there is a bit of a lack of diversification in terms of the sources of FDI and also the industries that FDI is going into. So I'd say at this point, policy should be oriented towards two things. One is diversifying the sources of FDI beyond China into other countries as well. And I think that's something the government has been doing. We've been seeing a lot of trade agreements or a lot of start of trade agreements with the UAE, with the GCC in general. We've also seen Indonesia starting to ascend into the OECD, which is also important. They've signed BRICS Plus now as an official member. So I think all of this is quite important in the macro context for Indonesia because it will help them in terms of diversifying their trade and investment base, right? But in terms of diversifying the sources or the engines of growth from just minerals, minings, and resources overall, I think that is also quite important. So policy, I think at some level needs to be very firmly oriented towards this diversification. And I think we're seeing it to some extent, but there is a focus on the downstreaming sector, which I think the governments have had for many years now. I think this has been consistent policy for the last 15 years or so when it comes to Indonesia policy. So along with that policy, you have to find the complementary policies, maybe EVs, EV production, which is something also the government's looking at. So I think the focus has to also look to bring in other ancillary industries, which can also benefit from the minerals and mining sector. And third, if I may, is also the role of the private sector. I think while FDI is extremely important, domestic investments and private sector investments have to complement FDI inflows. And at this point, I think although a lot of Indonesia's GDP growth is actually contributed by the private sector, there has to be a lot more growth coming from this sector, a lot more new investment, greenfield investments, in order to achieve the 8% target.
Okay, thank you so much for that. And Nicolo, what would be your perspective on the matter?
So I think they've covered very well the topic. I think I will just add a few small things. I think one, we have seen FDI being implemented very well into 2024. I think we heard this morning about growing this through the EV value chain, and there is definitely competition for Thailand when it comes to batteries. So I think that these are areas where we want to ensure we are competitive in Indonesia. Another big area is AI, right? And the competition is more with Malaysia. But I think as I will say, we look towards, for example, the new US administration, the reason why Malaysia has been able to attract a lot of these US companies might be shifting, and there is an opportunity for Indonesia to capture this, which I think is something that could encourage even more, I will say, AI and FDI in the country. And then clearly other sectors will include healthcare. Healthcare is another area where I think there's been tremendous amount of policies towards better and more healthcare industry in Indonesia, and I think this is a natural place where we should continue to invest. For us, from a banking standpoint, we have been, I would say, in constant dialogue with partners around the world to come to Indonesia, whether it's in the private sectors or sovereign. And I think it's both about bringing, for example, Middle Eastern Sovereign Wealth Fund. I was here 2 weeks ago with one of those funds, introducing them to companies, but equally bringing the likes of INA, of Darantara in other countries. So we brought one of the fund in Korea in the past. And so I think there is this necessity to cooperate, I will say, in the way that INA has done it in terms of co-investments, which has been a real role model across the world in terms of how a sovereign wealth fund can generate FDI into the country. And equally, I would say, reverse roadshows of bringing these funds in the countries where we target the FDI to come to Indonesia.
Thank you so much for that. It's interesting that you all talked about the trade war as a potential opportunity for Indonesia as manufacturing relocates away from China. But it's clearly going to pose some challenges towards Indonesia. Trump has been very loud about his desire to put tariffs on all sorts of countries, not just China. And that's obviously going to put a damper on global growth, and Indonesia is going to feel that. And if you would want higher growth, that might suggest rates coming down. At the same time, the tariffs are going to have an effect in America on inflation. They're going to affect dollar strength, and that's all going to push the Bank of Indonesia to keep rates up, to defend the rupiah, to keep bond markets calm. How can Indonesia sort of navigate this rather tricky macroeconomic moment? What sort of policies and stances can adopt? Pak Chatib, if we could start with you.
Thank you very much. This is a tough question because let me put the context first, in the global context here. Of course, I'm not an expert about the US economy, but the way I look at it, the Trump policy, the three important components when he made an announcement. The first one is raising a tariff, as you said. It somehow will have this inflationary impact, even though maybe the impact will be relatively limited. It depends so much on how much of this, raw materials and then capital goods has come from import. The second policy that he mentioned is the tax cut. And this will have an implication for the higher budget deficit. Yeah. And I can imagine under this situation of the higher budget deficit will not be easy for the Fed to cut the rate because the bond yield will increase, right? The third policy is the deportation of the so-called non-documented workers. And as probably many of us fully aware in the US that jobs in the unskilled level jobs dominated by these non-documented workers, right? So if they're being replaced with someone with higher wages, this will have an inflationary impact. So exactly what you said, there is a risk. The way I look at it, I hope I'm wrong, maybe even for the Fed, it's not easy to pause this level, but maybe they have to raise the rate. The implication is we will see the strong dollar. Now the question is, what are the policy options available for Indonesia? I don't see much room for the monetary policy because most of the central bank all over the world, they are working at the mercy of the Fed. If they try to have this independent monetary policy, then the implication is there will be an impact on the exchange rate, right? If Bank Indonesia cut the interest rate, cut the rate, the policy rate, then you will see the impact on the depreciation of the rupiah. Yeah? So I don't see much room for the Bank Indonesia to cut the rate significantly to expand the monetary policy. On the spending side, because the cost of fund become more expensive, the strong dollar, not much room for the fiscal policy. So the only option for Indonesia available to me is only do the structural reform. That is why this economic deregulation, removing the bureaucratic hurdles, create certainty, GovTech, the government technology, digital, that will be the solution. And I can see if we provide this kind of policy, that perhaps could provide a good ground because there is a possibility of the relocation from China to some Southeast Asian countries. So the way I look at it, provided we do our homework, then I can see the opportunity to maintain relatively high growth.
Thank you for that. So if Indonesia is facing a tricky situation, its only real solution is to reform further at that point. Lavanya, what would be your perspective on this?
I think I agree with Pak Chatib in the sense that it is complicated for central banks at the moment. They have to deal with US Federal Reserve where policy direction is not very clear. At some point, the market priced in about 3 cuts this year from the US Federal Reserve, down now to 2 cuts. At one point, it was 1 cut. So we are in an uncertain situation when it comes to monetary policy, especially from the US. But how that translates into EM currencies and how that translates into EM central banks has been quite differentiated across certain central banks that we're seeing. So last year we saw Bangko Sentral like Filipinas, the Central Bank of the Philippines, actually cut rates from August. We saw BOT, which is the Bank of Thailand, also cut rates in November. And we saw Bank Indonesia cut rates in September and January, right? So I think at one level, central banks in this region are trying to create space to hike again if necessary, right? If inflation is going to go up, if tariffs are going to come, ultimately that means higher global inflation, and that means the need for tighter monetary policy. So at the current levels of interest rate, especially in a lot of Southeast Asian and even Indian central bank, you have to ultimately reduce your rate a little bit in order to be able to give yourself some space to hike rates later, right? That's one aspect. So we do see a shallow cutting cycle in EM central banks, at least in the near term, after which we expect them to stay on hold, which will help with macroeconomic stability, right? But I think at the same time, there are some certain innovative ideas or innovative instruments that central banks can also use, right, to attract portfolio flows. I think the SRBI from Bank Indonesia was one of them, right, which actually helps in terms of trying to keep portfolio inflows steady into the country. At the same time, I'd say that, overall, the sort of multiple or the multi-pronged stance of Bank Indonesia in terms of trying to promote macroprudential measures for growth and the policy rate for stability has actually worked in the last 1 year or so, right? At this point, I think the central bank is trying to sync both macroprudential policy and the policy rate to some extent. And I think all of this ultimately is a sign of the central bank trying to give some stability, macro stability. But as we go forward, it will get more complicated for central banks in this region. And I think, you probably have to turn to a little more innovative solutions. You have to dig deep into your monetary policy toolkit to try and maintain that stability and to try and also keep portfolio flows steady. And as Pak Chatib mentioned, structural reform is extremely important because in that context, you can keep FDI flows also supported.
Thank you very much for that. And Nicolo, would you like to come in quickly for a couple of minutes maybe on your perspective on this matter?
Sure. I'll listen. My starting point is on this is in the US, Trump trade has not really happened the way people expected it to be. So I think if you look at the beginning of 25, what I see in the market at the moment is the dollar has weakened and stock price have not really, on the equity side, performed as people expected it to be. Conversely, European stock has done better, which I didn't expect, me being Italian as well, but they have, which is good. Now, the question is, why is that, right? And I think a lot of it has to do with timing. People expected in the US the regulations, tax cut in order to boost corporate investments, and then later on, tariffs, right? Well, what happened is essentially President Trump started with putting in tariff on a number of situations, and there's a lot of uncertainty whether those tariffs are negotiations in the end rather than something else. But essentially what I'm trying to say is we are not in this context where the dollar is strengthening, and we're not in this context where US is doing as well as we thought it was going to be. At least the perception I see in the market is there's a lot of uncertainty, and investors are struggling. And of course, rupiah is generally fragile when there are, I would say, US yields to US yield. But you know, at the moment, Indonesia has very strong FX reserves and equally a very moderate deficit. So I think Indonesia is in a situation today that is very strong. And this surprised me because I come to Jakarta often, I talk to people, and there is often at the moment question on what do you think is the state of Indonesia, how things are going. And they're surprised when I tell them, I think Indonesia at the moment is in a great place. It's a great spot. You have low inflation. You have great political stability. You have, I would say, a number of, policies that are driving growth. And frankly, today, if you look at the equity stock market that we were talking about, it's trading at 11 times PE. 11 times PE, to put it in context, is the lowest it's ever been since GFC compared to Asia ex-Japan. So for me, it's very simple. It's buy Indonesia. Very simple.
Okay, thank you very much. I'm sure that upbeat perspective will go down very well in this room. So for the next question, actually, moving on from the US to China. So China has been one of Indonesia's most important partners for trade and for FDI, but it seems to be entering a sort of prolonged period of lower growth, growth of 5% in 2024. That may seem quite high to a lot of Europeans like myself, but it's low historically for China, and it seems to be on a trend downward. How should Indonesia react to the fact that one of its key economic partners seems to be slowing down for the moment? Back, Chatib.
I'm glad you raised this issue because if you look at, the impact of this global spillover to our economy in the financial sector, the role of the country like US is very important for us. But if you look at through the trade channel, China is more important than any other countries in the world because China is our largest trading partner. So you are absolutely right. When you mentioned with the slowdown of China, there will be an implication of to the Indonesian economy. If you believe in the sensitivity analysis, well, this is just sort of like, how to apply the scientific way using the econometrics model. So one decline of the economic growth in China, probably 1% decline of the economic growth in China, the sensitivity analysis is about 0.3% for the economic growth in Indonesia. So if you are talking about the possibility of the slowdown of China around due to the scenario under this higher tariff is about 1.5%. That probably will be an impact about 0.5% to Indonesian GDP. Yeah. So definitely this will have an impact. Then the question is, what can be done? It is very important for not only for a country like Indonesia to diversify, the export destination, because I think one of the possible country destination for us is ASEAN. If you look at the intra-trade ASEAN, that's quite significant. And of course, we have to find some other sort of like non-conventional export destination countries as well. But definitely, I couldn't agree more with you. The impact of the slowdown of China will come to us through the declining energy prices, commodity prices, with 60% of our export is commodity related. Yeah. So for example, in the case of nickel, because 80% of our export to China, to nickel export is to China, this will also have an impact. Yeah. So this is the thing. Diversification is a very important, not only in terms of this country destination, but also the product.
Thank you very much for that. And Lavanya, do you have anything to add to that?
No, I think I 100% agree with Pak Chatib. I think here diversification is the name of the game. It has to, I think we've seen the benefits of relying on China in the recent years. And I think that's shown in investment spending, it's shown in FDI and in exports. But I think at this point, just given the concentration risks, diversification on the trade and in the investment side is quite critical for Indonesia, particularly over the next 4 or 5 years, simply because most other countries are also looking to diversify. So it's easier for you to find a more willing partner at this point in the global stage than it maybe was even 10 years ago. So I think diversification, I think, is a top priority at this point.
Okay, thank you very much. Nicolo, would you like to come in on that? Maybe any particular policies that you think that the Indonesian government could adopt to promote said diversification or otherwise reduce reliance on China as its main driver of growth at the moment?
Yeah, so on the latter, I think similarly than how I disagreed on what you were saying in the US, I disagree in China. So I'll provide a bit of a contrarian view, but I'll tell you what I see in the market right now. Listen, what I see is obviously the timing of this conference is good because it's post DeepSeek. And what we see at the moment is the equity market recovering in China as well as in Hong Kong. On our side, we have seen a lot of flow coming not just from domestic, but also from international investors. And I think a lot of what we hear from international investor investing back into China, which we haven't seen for a while, is they believe that a lot of these changes in AI could drive consumption, right? So in the past, a lot of the rally was driven by stimulus, while at the moment, I think we see the first rally in China that is not stimulus driven. And so there is really the view that from a number of PMs, and it's still, I would say, more niche, but we expect it to grow, that considering this is open source in particular, a lot of companies in China will benefit from it, and we could expect broader consumption. Where I see this in the market is not just in the equity, but also on the bond market. And let me give you an example. We used to have a very big debt capital market business in Asia, which was driven very much by high yield out of China. This has been completely shut for the last 2 years. Last week, we did our first bond in real estate high yield in China. It was a 300 million bond. It ended up being 4 times covered, more than 100 lines in the book. Today, we did a tap for this transaction because there was more demand coming out of it. So what I'm trying to say is equity and debt investors are positioning in China for a recovery that is probably stronger than what we have been expecting. Time will tell, but what I'm trying to say is that I am more positive towards what I see in China at the moment that I would have been if we had spoken 2 weeks ago, which is exciting in terms of what it means for Indonesia.
Okay, thank you very much. So maybe we should be a bit more optimistic about China's long-term prospects, and maybe, as you were saying, we're a little less optimistic about the US for the moment. So my next question is, since this panel is about fiscal and monetary policy, is that the new administration has talked a great deal about raising taxes in Indonesia. Indonesia does currently have a pretty low tax to GDP ratio of about 12% compared to, say, 19% in this region, 34% in OECD countries. And if it's going to fund further investment and fund its quite ambitious social programs, it needs to raise taxes. At the same time, we've seen the government hesitate to do so at times. There was a VAT hike, which was planned, but the worries about the cost of living, about pressure on Indonesia's middle class, meant that the VAT hike was trimmed a little bit. It was made only to apply to certain products deemed luxury. How can Indonesia balance these two competing pressures? One, the need to raise revenue, and the other, the desire not to overburden the population at a time when the cost of living is starting to bite a little bit? Pak Chatib.
Well, the biggest problem for the collecting revenue in Indonesia is not about the tax rate, but it's about compliance. So even though you increase the tax rate significantly, but your tax base remain the same because the limited compliance, you want the significant increase of the tax revenue. And even if you cut the rate, then the tax revenue will drop, right? Under this kind of situation, where the constraint is the compliance, I think what the government should do is focus on the administrative reform rather than increasing the tax rate. Fortunately, we conducted a research on this, and then it was adopted by the MOF. Bear with me, let me talk a little bit more technical. In Indonesia, in a small tax office, there is someone who sort of like manage your tax file. We call it the account representative. Okay, one account representative in every small tax office in Indonesia is responsible for 4,000 taxpayers or 150 companies. Can you imagine 4,000 taxpayers? They have to manage 4,000 taxpayers. What's they gonna do? There is no way for them to scrutinize all these 4,000 taxpayers or 150 companies. So what they did, they just focusing on the maybe top 100 or top 10 companies. So the more you pay your tax, the more you'll be scrutinized by the tax office. So there is a disincentive for the company to grow, right? Because once you reach a certain level, like 4.8 billion rupiah, and then many companies, they split the size, go into the smaller company. So what will be the solution? Our research shows that if we move the top taxpayers from the small tax office to the medium and the large tax office, in which the number of staff is significantly higher than in the small tax office, then the burden of this tax office will be uniformly shared by many companies. And the cost of doing this reform is very small. Our simulation shows that could increase the tax revenue equivalent to the 8% basis point. So that's what our recommendation has been adopted by the MOF. It was about 2 years ago. So they increased the number of the medium-sized tax office to become 33 last year. And we can continue with this. This could be done, of course, in relatively medium term. The second aspect the government should do, our threshold for the VAT is too high. It's 4.8 billion, 90 probably is even higher than many countries in Europe, right? So there is give a sort of like room because this threshold is too high. So many companies split, once they reach probably about 90% of the small medium enterprise, their size is lower than 4.8 billion rupiah. So the government somehow should lower this threshold. But I know this is not politically easy. I always like what Jean-Claude Juncker said. We all know what to do, we just don't know how to get re-elected after we've done it.
The perennial problem, how do we do the right thing and not immediately get thrown out of office for doing exactly that? Lavanya, if you could come in maybe on striking the balance between tax raising and growth at the moment.
Since it's the first few years of this political part, President Prabowo's reign, he could use the first few years and then leave the last few years for more popular measures. But I think more generally, tax reform is never easy. I think we've seen it across examples in India, in Southeast Asia, with the Philippines, for example. None of the tax reforms that they have undergone have been easy, neither have they been popular. So I think if the goal is to increase the tax to GDP ratio, at some point, somewhere along the way, there will be tougher reforms that need to be put in place. But the first steps can always be low-hanging fruits, which I think include increasing efficiency of tax collection, reducing leakages. The second one is just removing exemptions where you possibly can. The VAT in Indonesia, apart from corporates, also has a lot of other exemptions, which I think reduces the benefit of having the VAT overall. Personal income tax collections in Indonesia have been much lower than regional peers. There is scope to increase that as well. And I think core tax as a system has just been implemented in January. Of course, it has its teething issues, but I think fundamentally when you introduce new tax reforms and new tax measures, such as things as core tax, you will always find that there are teething problems. We saw it in India with the GST system. The GST compliance system was a system called GSTN, right? And for the first 6 months, nobody in the system knew how to use it. So I think at every stage of these new tax and these more complicated tax measures, you always find the first 3 months filled with teething issues. So I think that's something that you just have to take in the stride of new policy. But ultimately, I think tax reform comes down to making sometimes hard choices and hard trade-offs. The sooner they are done, the better. But in terms of improving compliance, you can always do it by just targeting the low-hanging fruit.
Okay, thank you very much. And Nicolo, if you have anything you wish to add?
Yeah, no, I think it's difficult to disagree on this one. So I think it's, I will say exactly what Pak Shabti said. So I think it's one, yes, of course, you could always argue to increase the higher band if you wanted on the tax rate, but I think more simplistically, the issues in the compliance side, right? So the compliance side is the one where I will focus on, and I think what is particularly exciting at the moment is everything going on towards digitalization. So to me, it's about investing in digitalization, in technology that allow with better compliance. National identity is one, but things as simple as you don't get your driving license unless you pay your tax is another. So I think Indonesia is a tremendous, I will say, opportunity also in terms of technologies within the country. And so I think there is a panel tomorrow around this topic, but I think it's particularly interesting to think how can we continue to develop technologies and the digital economy towards the needs of the country. And one of the big needs is tax compliance. So it's about really bridging the gap between private sector and public. But, basic example that I see that are where Indonesia ahead, right? When I arrived at the airport yesterday, takes me 15 minutes to be in the car. When I arrive in the US, where we have a super strong economy, take me an hour to get out, right? So I think how can we apply more of this into things that are really needed, such as tax compliance, where I will focus on. There's a fantastic amount of digital technologies in the country. Just 2 weeks ago, we did the continuation fund for an Indonesian GP, which went very well. So I think there's been a lot of concern from investors on how investable is Indonesia on the tech front. It's very much investable. There's a number of quality companies, and I think we should expect even more so a bridge between what are the needs of the countries and what are the technology we develop in Indonesia, and I think that's where I would like to focus on.
Okay, thank you very much for that. And I think for the final question before we wrap up this panel is about Indonesia's debt. So currently Indonesia's debt to GDP ratio stands at about 39%, which is low, seems pretty healthy, but at the same time, the cost of servicing that debt eats up about 15% of the budget. It was just 8.6% back in 2014, so it's clearly risen fairly significantly over the past decade. Bank Indonesia also owns 25% of that debt, so there's probably limited space to fund the government by doing more of that. And yet, at the same time, this government, which is keen for more growth and signaled that it's keen to sort of pump the gas on spending a little bit, which raises questions about managing this debt in the long term. How should the Indonesian government approach this? How can they manage a potential increase in debt levels, and how can they reassure international investors who are perhaps watching this with a degree of nervousness?
I'm glad you asked this question because you mentioned about our debt to GDP is about 39%. It's relatively low compared to many countries in the world, especially for the European countries. You're talking about this 39%. We adopted the Maastricht rule in which that none of the European countries, implement it actually. The maximum budget deficit, the fiscal rule is 3% of GDP. But let me try to respond to your question. While I'll agree debt to GDP is a good indicator to shows that whether our debt is in the relatively safe level or not. But I think it is important to look at the other indicators, which is debt service to tax ratio. Because if you're talking about the interest payment and amortization, you're going to pay through your tax revenue, right? Not from your entire GDP. So if you look at the debt service to tax ratio, the number is much higher than this debt to GDP level. My point is, this is related to your previous question about tax. It means that if the government would like to increase borrowing or to borrow more money, this could be done as long as the tax revenue increase faster than the growth of the debt itself. Otherwise, your debt service to tax ratio will increase. It doesn't mean that the government will have this more fiscal space. Because the more you borrow your money, but if your tax revenue remain constant, then the more money will be allocated to pay the debt service, right? So the implication is, to answer to your question, the government can afford to borrow more money as long as at the same time they could also increase the tax revenue faster than the growth of the debt itself. Otherwise, I'm not saying that we'll be in trouble because at this stage we are relatively okay, as you said, But I think it is very important, exactly what you said, to look at about this debt service, more than the issue of this debt to GDP. And then one way to do it is exactly what the government is doing it now. They do the sort of like relocation of budget, the budget efficiency. They make sure the allocation of budget should go into the sector that could create the multiplier relatively high compared to other sectors.
Thank you very much for that. So long as debt is controllable, so long as you're growing, so long as you're collecting more tax, but you've got to make sure that you've got quite a close handle on it then. If we could get any follow-ups on where we think, on how Indonesia might approach its debt at this moment.
Maybe I go. I think there are just 2 points that I'd probably make in the interest of time. One is interest payments in nominal terms are likely to increase or remain elevated at this point because we're not going to go back to the zero interest rate environment that we saw before COVID. So I think there's a fundamental shift in the way global interest rates have worked, which necessitates that all governments across the world have to budget higher for interest payments in nominal terms, right? And I think that's a fundamental shift that we just have to deal with in terms of global economies. The second one is just budget allocation. So budget allocation just needs to become more prudent. If you are going to invest in social causes, basically free food programs, or if you're going to do education programs, I think we can take a leaf out of the Philippines book where they did it as conditional cash transfers. It's called CCTs. You do it in a way where you also see outcomes. So the transfer is associated with a very tangible outcome in education, in health. And so I think that also helps ultimately quantify the goals that the government is setting in terms of its allocations.
Thank you so much. And Nicolo, what would your thoughts be?
So on this one, I think 2 things. One, all the efforts that are being done by the current government will continue to increase transparency and will have a positive impact from rating agency and will naturally decrease the cost of debt. That's 1. 2, I think we were talking about INR debt, about rupiah debt idea. I think as you think towards alternatives, you can look at other currencies and raise in US dollar, in euros, or in yen, like the Republic of Indonesia has done in the past. Naturally, especially if you look currently in the market, some are deeper than others. Obviously, dollar will have the highest capacity and the longer dated one, right, where you can raise up to 30 years in dollar. But interestingly, a market like the euro, for example, will provide a debt at costs that are lower in the context of lower euro rate, but also potentially lower rates going forward in Europe, as we expect there to see more cuts. When it comes to euro, there is also quite a deep market for the Republic in Indonesia, so it will be easy to raise. And frankly, if you talk to bond investors today, what they will tell you is that the Republic of Indonesia has done very well in terms of managing those issuance. If anything, they will say, they would love to see more. So I think I will have plenty of interest for Republic of Indonesia bond across this currency. So I think that could be clearly an option. And, we can take examples for elsewhere. If we look at, for example, in January, we led a bond for the Republic of the Philippines, where we did in excess of $3 billion in US and $1 billion in euros, all long dated. These are all very much available to the Republic of Indonesia, that if anything, there's been more scarcity of supply there. And so investors are very much there for it. And if anything, found that that there's been, I don't want to say cautiousness, but it's been managed very well. So there's a lot of interest.
Thank you. I think we have about 2 minutes left. So just as a quick follow-up to that, as in the run-up to the Prabowo administration, there was a lot of talk about the 3% deficit rule and whether this needed to be stuck to. It became something of a totem. Do you think then that there would be actually space to break the Maastricht rule, which Indonesia has kept to while every other European country has ignored it? So you were saying that there's sort of appetite for Indonesian bonds and debts. And in the run-up to the inauguration of Pak President Prabowo, there was discussion of whether the new government might prove more flexible on its rule of 3% deficits for budgets. If there's quite a lot of, and there was quite a lot of criticism of this idea, but if there's, an active appetite for Indonesian debt, could Indonesia actually safely increase its deficit spending, do you think? It could be Nicolo or Pak Chatib or whoever feels most able to answer it.
Well, that's the beauty to become a finance minister here. Pak Agus Martowardoyo is a former minister of finance. You can ask him. Every time the politician come to us, we will say that I would love to support your idea, but it is stipulated in our law that the maximum budget deficit 3%. And for that reason, we were able to cut our debt to GDP ratio from 120% after the Asian financial crisis to around less than 30%. And that makes the, become an anchor of the Indonesian macroeconomy.
Okay, thank you very much. Unless one of you two is really dying to jump in with a comment, I think that we're reaching about the end of our panel. I would like to thank each and every one of you for your time and your very insightful answers, which I'm sure we have all found very stimulating, very interesting. And I would like, once again, to thank you, everyone in attendance here, for your time, and thank the Indonesian Business Council and all the members of its board for organizing this event. Thank you.
Thank you very much, Joseph Rahman, for leading the session. Let's give a big round of applause for all speakers. I'm inviting all of you to step a little bit forward in front of your seats, as would like to give some token of appreciation to all speakers and moderator. And for this, would like to invite IBC board, Mr. Harun Hayadi, to deliver the token of appreciation. And let's use this opportunity as well for a group session of photo. All right, let's pose to the camera. 3, 2, 1.